Okay, I've given you some definitions on the first page, and what we're going to talk about is applying overhead. So if you go towards the bottom of the page, I've got an example about a company using an allocation base of direct labor hours to apply overhead. And about halfway through the first page, a little more than that, I've given you the formula to determine the predetermined overhead rate. And the way you determine that is you take your estimated total manufacturing overhead and you divide it by your estimated activity base. So before the period even begins, you decide all of this. You decide how you're going to apply your overhead. So what do we think our overhead, our total amount of overhead is going to be during the year? And for the allocation base, you're supposed to use something that actually drives your overhead. The reason we apply overhead rather than using our actual costs is for a few different reasons. One is because we remember the whole point of managerial accounting is getting information really quick. So if we waited until the end of the period, we wouldn't have that information as early as we need it. The second reason is there's seasonality factors. So for example, if you make a product in the spring, you'd have very low heating or air conditioning costs. But it has nothing to do with making the product. So it wouldn't really make sense to attach more to a product made in the summer rather than the spring, when basically the only difference is the season they were manufactured. So that's some of the reasons. But in our first example, we have our overhead costs. Our estimate is $100,000. Our estimated total direct labor hours are 10,000. What's our overhead rate? We're going to divide 100,000 by 10,000. That gives us $10. So for each and every hour of actual activity, we will apply $10 of overhead. So the next item is saying, on page 2, refer to the predetermined overhead rate calculated above. If 6 direct labor hours were used during the period, what amount of overhead would be applied to work in process? So we take our predetermined overhead rate, 10, multiply it by our actual activity, which was 6 hours, and that gives us $60. That's how much overhead we would apply. Okay, if you go down about halfway through, we start homework examples. So the first one, Bob is computing predetermined overhead rate annually on the basis of direct labor hours. At the beginning of the year, he estimates 20,000 direct labor hours will be required for the period's estimated level of production. Estimates 324,000 of fixed overhead expenses for the period and variable overhead of 2 per direct labor hour. Bob's actual overhead for the year is 340,200. Actual direct labor hours are 19,000, and we want to compute the company's predetermined overhead rate for the year. To do that, first we have to take our estimated fixed overhead, which is 324, determine our variable overhead, which is, they tell us, $2 per hour, and they also tell us that we're estimating 20,000 of direct labor hours, so 2 times 20,000 is 40,000. We'll add the two together, and that gives us our estimated total manufacturing overhead costs. We're going to then go ahead and divide that by our estimate of the activity base, which is 20,000, and that will tell us our predetermined overhead rate. It is $18.20 per direct labor hour. Everything else in that problem you didn't need. So that's the example for number 1. For number 2, Bob uses a predetermined overhead rate of $21.20 per direct labor hour. This rate was based on cost formula estimating $296,800 of total manufacturing overhead for an estimated activity level of 14,000 direct labor hours. Company incurred actual total overhead costs of $294,300 and 14,200 total direct labor hours during the period. Determine the amount of overhead that would have been applied to all jobs during the period. My predetermined overhead rate is $21.20. My actual direct labor hours are 14,200. So if we multiply the two together, we see we would have applied $301,040 of overhead. So that's how much would have been applied. Number 3, which is on page 3. Bob Company predetermined overhead rate is 14 per direct labor hour. Direct labor wage is 18 per hour. The following information pertains to job A300. Direct material cost We have that is $240 and direct labor is $216. Remember, direct material, direct labor, and manufacturing overhead applied is going to give us our total manufacturing costs. So this $624 is our total manufacturing costs. I'll write that down so don't forget that. So the way we're going to go ahead and figure out how many direct labor hours are worth, because that's how we apply our overhead, is we're going to take the total direct labor cost, which is $216, divided by our direct labor rate per hour, which is 18, and that tells us 12 direct labor hours were worked. We apply $14 of overhead, $14 of overhead for every one direct labor hour worked. So 14 times 12 is the 168. The second part of the question asks us if job A300 consists of 24 units, what's the average cost assigned to each unit? We simply take our total cost of $624, divide it by 24, and that gives us 26 per unit. So that takes us through the first three homework problems, and now we will go ahead and move on to homework problem 4.